You are streaming.
Great, thank you. Excellent. Well, I'd like to call to order the October 6th Audit Committee meeting. Can we have roll call? Carolyn, please.
Yes, you may. Stephanie Woodruff,
Here.
Christine Mulcahy, Al Castillo,
Here.
Mary Ellen Erpelding Chacon, Adolfo Montoya.
Here.
I believe I got everybody.
Excellent. Thank you, Carolyn.
You're welcome.
Okay, next item, approval of the agenda. Is there a motion?
I move we approve the agenda.
Okay. Is there a second?
I'll second.
Excellent. Motion, all in favor, say aye.
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 Aye. Opposed? Motion is approved. Second item is the approval of the minutes, the regular audit committee from June 23rd, 2021.
I have a comment. I mean, a change to I haven't seen the minutes, but I'm assuming that they've shown me absent, and that's incorrect. I have zoomed in, even though I've heard you, but you have not heard me in the past two meetings. Okay, so I'd like the minutes to show that I was present.
Okay.
I move that the minutes be amended to that extent.
Noted. Is there a motion to approve the minutes with the change?
I'll move to approve with a change.
Is there a second?
Second.
All in favor, say aye.
Aye.
Aye. Motion is approved. Okay. Next session, executive session. There is no executive session in today's meeting. Next item is the new business, the FY20 audit presentation. We've got Raul from CLA, Finance Director, Ms. McCoy, Finance Director, and Ms. Alexis Lutero, the Assistant Finance Director, will be presenting the FY20 external audit. So I'll go ahead and turn it over to you guys for the presentation.
Thank you, Madam Chair. If you would like, we can scroll through a brief PowerPoint presentation to provide some context. This was the presentation that we provided to the Finance Committee on Monday night. Again, we fully recognize the members of the Finance Committee are legislators, they are our city councilors that are not experts in accounting or auditing as the individuals that do make up the audit committee. So we'll go ahead and go through this presentation pretty quickly because it does contain some pretty fundamental and accounting terminology but we did want to show this committee what information is being presented to the Finance Committee as well. After that, we'll go ahead and turn it over to Raul Anaya, so he can give you the most of the detail that was in the FY20 audit. So with that being said, I'm going to go ahead and share my screen so we can get this presentation up. Okay. So as I mentioned today, we're going to have some finance department staff. Myself, Alexis Lotero is joining us on the call as the Assistant Finance Director. Tommy Chavez, our Acting Accounting Officer, cannot be with us this afternoon. We are also joined by Clayton Pelletier, our Controller, and Bradley Flitch, our Planning and Investment Officer. And very briefly, I would like to introduce Melanie Sharp to the group. Melanie, are you on the call today?
Hi, yes, I am.
This is the newest member of our finance management team. Melanie Sharp is the new payroll manager that the city has hired. So we wanted to introduce her. There are a couple of findings that she will be responsible for working with us on the corrective action for. So thank you, Melanie, for joining us.
Thank you.
Welcome, Melanie.
Thank you.
Welcome. Thanks for joining us.
And then we'll be moving into the meat of today's presentation on the FY20 audit with Raul. This just gives a brief summary of where we were a few years ago with the McCard report, moving into where we're at now with the financial statements, with the total number of with our clean opinion in FY20, 21 findings, and 8 findings resolved from the prior year. We did review with the finance committee members the difference between a financial audit, fiscal responsibility, and financial performance for the city of Santa Fe. We also reviewed with them the difference between the opinion of the audit and financial results in this 4-box matrix that covered all of the different possible outcomes. We just want to, again, touch on something that this committee is very familiar with, is where we've been in the past few years, starting out with the 2017 fraud risk assessment that identified what we're grouping into 3 major problem areas for the city: the failure of the internal audit, the failure of the external audit function, and some challenges with internal controls. So as you all remember from the McCard report that was released at the time, the accounting firm recommendations were that the city really focus and prioritize on the recommendations that they did present to us in that 40-page report in a way that was logical, meaningful, and cost-effective. That being said, that's exactly what the city's approach was. Together with this audit committee, the city took the approach to address the improvements in the internal audit function. So we've outsourced the internal audit function to RADW, to the team that you all have met and had present in front of you multiple times, including Jessica Bundy and Caitlin Gutierrez and Ali Wagner. The internal audit team has done a series of reports for this committee and presented to this committee, including the procurement and accounts payable reports, leases and lease accounting ahead of GASB 87 implementation, and most recently the public utilities and billing report. So work, of course, that your committee is very familiar with. Moving on, the 2017 fraud risk assessment did identify that the city had changed audit firms, but some of those members of the audit team had not changed and had actually stayed with the city's audit engagement for multiple years, which of course has its risks. So the city did issue an RFP for audit services. After that competitive bid process, we selected Clifton Larson Allen, and they have been with us since. In addition, we have performed a series of other audits, including an IRS audit of the calendar years 2016 and 2017, lodgers tax audits that have been presented to this committee before, as well as a performance audit of the police department by the Police Foundation. That being said, this slide really does show the progress that the city has made over internal controls. We recognize that the audit, FY20 audit, still identifies areas for improvements in internal controls over financial close and reporting, so we'll get into that a little bit later. What we've done, really taken the prioritized approach that the McCard accounting firm recommended. We've modernized our accounting system, which really was, we were able to focus on our role-based system and implement many modules, including accounts payable, accounts receivable, budgeting, procurement, covers the gamut of our accounting system. We've reorganized the finance department to ensure segregation of duties. We've hired professional staff like those that are joining us today with 20 plus years in experience into these key managerial roles with proper certifications. In addition, we have continued the process of updating policies and procedures, and the audit results that Raul will review with you today also highlight additional areas where we need to continue on this journey to improve our policies and procedures. We've also developed trainings for staff, trainings over the year-end close process, procurement, trainings over cash handling, budgeting, and grants, And we've also done several trainings in our new Munis financial and human capital management system. Most pre-pandemic, and then now, most recently, we have partnered with New Mexico Edge, which is a training program that provides some detailed trainings over different areas, including procurement, including basic accounting principles. And this New Mexico Edge organization is associated with the New Mexico State University. So we're very happy to have them under contract again for training with our staff. And Carolyn, a lot of kudos goes to Carolyn because she's been the one leading that, arranging for those trainings and leading that partnership with New Mexico Edge. So I'd like to thank her for that. Today we do have the FY20 audit in front of you. Some of the challenges that we have faced is the implementation of a new system, as you all are familiar with. Since the late 1980s, the city had used the same J.D. Edwards system. It was an antiquated system that lacked internal controls that were highlighted in the McCard report. FY20 was the first full year of using this new Tyler Munis financial system. That same year, the human system was also implemented in the spring. This was a really key change, a really pivotal moment for the city of Santa Fe to modernize our IT system. So, but of course, as with any IT system changes, there were several challenges, some of which did contribute to the late submission of the FY20 audit. As you all may remember from some of your work with the state as well, when the state implemented the SHARE system, it's a PeopleSoft-based system, they encountered similar challenges in being able to close their fiscal year. Some of us worked at the state during that time, during that implementation, and remember that a few of the agencies, including the General Service Department, as well as the Workforce Solutions Department, were late on their audits and had, findings about multiple findings in those years as well. Other challenges that we faced in this year were related to the COVID-19 pandemic and to processing the CARES Act funding in a really limited time. In addition, we have had turnover in key positions. And as you all remember, our FY19 audit was submitted late as well, was completed late, which also fed into the late timeline for our current audit for the FY20 audit. So I'm going to turn this over to Alexis Lotero to talk about the city's corrective action, how we're going to get back on track to be able to, with our goal of having on-time audits in the future.
Good afternoon. The first thing we have done is we've already implemented our 21 year-end close processes. We've already completed budget, procurement, and payroll, so that we're ahead of where we were last year. As part of the appropriation and budget process, we received $500,000 to support Audit Prep. So we have hired contractors to help us prepare and get everything organized and completed, reconciliations done, all of our necessary work done for our audit. We've also funded several key positions within finance. We had a very high vacancy rate. We've hired an AP supervisor and a grants accounting analyst. As you know, we'll note that we had multiple issues around our grants management. And we have currently posted an accounting officer, a budget officer, and an accounting manager at the moment. Thank you.
Thank you. To talk briefly about the city's financial performance, we're going to turn it over to Clayton Pelletier, the city's controller. And then after that, Brad will follow up with some information on our debt management as well. Go ahead, Clayton.
Good afternoon. I want to talk to you first of all about the net position. Keep in mind that I'm only speaking of a comparison between the 2 years FY19 and FY20. The city's net position increased overall by $13.5 million. That was comprised of the governmental activities increasing by $5 million, and the business type, our activities increased by $8.5 million. So the city continues to have a positive, healthy net position.
Thank you, Clayton. This, as I mentioned before, was a slide that we also shared with the Finance Committee members on Monday night. The team, this team that from the Finance Department that you have with you today has also been working on a series of other financial performance indicators that we will continue to share with the Audit Committee as well as the Finance Committee moving into the months ahead. So that's something to look forward to. Brad is joining us today to talk about the debt administration. Go ahead, Brad.
Good afternoon. So this slide here talks about the city's debt. Currently, we're in the process of refunding 2 bonds to lower interest rates. It'll save the city roughly $300,000 a year for the next 4 or 5 years. We refunded 2 bonds in the FY20, the 2010 general obligation bond. We refunded it, saved about $50,000-$60,000 a year in interest expense. We also refunded the Midtown campus debt at about $23 million. And that saved the city roughly $500,000 a year in interest expense. Right now, we have $19 million in general obligation debt outstanding. Given the increase in property values in the city, per state statute, the city can issue up to 4% of the taxable assessed value, which is roughly $4.5 billion. And so our debt limit on general obligation bonds is $180 million. So we have roughly $161 million in capacity. For our GRT debt, gross receipts tax, both senior and subordinate lien, currently our debt service is about $25 million a year, and it will fall to $17 million a year in fiscal year 2024. Currently, our pledged revenues are $65 million, and so we have almost 2.5 times coverage, and it'll be going closer to 3 times coverage, and that's what supports the city's high credit ratings of AA+. In this slide, what we're showing in the blue line is, or the blue bars, that's general obligation debt outstanding divided by the population. So this is a general obligation per capita outstanding. The red bars represents total debt per capita. One of the reasons the big decline in 2017 of the general obligation bond is the city defeased the 2008 GO bond and paid it off. As you can see, the city's been very prudent, and we've been spending more time refunding bonds than issuing new bonds. You can see that in FY20, the uptick, we had issued a $20 million senior lien GRT bond for capital improvement projects. The prior year, we had issued $11.5 million against against the gas tax. So one of the things that the city's been doing is expanding the various cash flows that we can borrow against. When we issued the gas tax bond, that was the first time we'd ever leveraged and borrowed against that cash flow. Currently, we're looking at leveraging the stormwater fee and getting some more capital in now so we can address some of the stormwater issues. We also, the Environmental Services Department, Wastewater Department became a standalone credit in the past 2 years with the issuance of the green bond for the anaerobic digester. And so, moving wastewater to standalone credit really frees up the ability of the city, instead of having to use our subordinate lien capacity to subsidize and assist the wastewater department in borrowing money. They can go borrow against their own revenue streams. So that was a big step forward for the city. Only two other entities, water and wastewater, are the only two standalone credits outside the city.
Thank you, Brad. This final slide, or second to final slide, is related to our capital asset administration at the city. The city's capital assets, both for governmental and business type, as of the end of the fiscal year 20, total over 700 million, obviously net of depreciation. Of course, in our capital assets includes everything from our land, our buildings, machinery, equipment, or all of our fleet as well. The total increase for the city's net capital assets during this period was 1%. As far as our major capital asset events for the year, the construction in progress for various city facilities totaled close to 40 million for both governmental and business type activities. So several of the projects in progress included, as you all are familiar with the city's portfolio, everything from street paving to river channel improvements, park improvements, building renovations, and traffic calming projects. All of this information is included in the management discussion and analysis section at the front of the book that was included in the agenda. Finally, next steps, we've discussed in this conversation with you today that we have a plan in place to hire additional staff, and we have some positions that are currently open. So we would encourage, if you know of anyone that is interested in joining our city team, to go to our website to be able to apply. With relation to our staff that we have on board now, our plan is to continue to provide training to this staff to make sure we all have the tools and the technology and the information that we need to make improvements. Our audit prep, as Alexis mentioned earlier, we have about $500,000 allocated by City Council to hire some CPAs to assist us with our FY21 audit close process. And we've already begun that process, and we have some positive news to report that some of our deliverables across 3 of our divisions have already been completed. So we're pleased to report that. With that, I will turn it over to Raul Anaya, the principal with Clifton Larson Allen.
Thank you, Mary. I'm going to share my screen to show a presentation that summarizes the audit results. Okay. Hello, everybody. My name is Raul Anaya, and I was the engagement principal for the City of Santa Fe's external financial audit for the year ended June 30th, 2020. I served this similar role, the exact same role, for the year ended June 30th, 2019. I've summarized some of the audit results, but if there's any questions you guys have along the way, please feel free to stop me and I'd be happy to answer those. First, audit opinions, which is probably the most important thing for me to go over. As an external independent auditor, our responsibility is to come in, look at your financial numbers, and then the actual financial statements are eventually issued and say if those numbers are a fair and accurate representation of what occurred during the year. We're happy to say, based on our test work and then the final numbers, that the answer is yes, we do believe that, and we issue an unmodified clean opinion. That's the highest opinion that an external auditor a CPA can provide. In addition, we look at your compliance over major federal programs as you guys receive federal funding. We looked at two major programs this year, CDBG and the Airport Improvement Program. The Airport Improvement Program was a modified clean opinion, meaning that we believed all the compliance requirements were followed. CDBG, we had a modified opinion over non-compliance over program income. I think there's some questions on if program income actually exists for this. CDBG did show program income and reported program income to the HUD, the federal agency that administers this thing. So we tested that, and the compliance was not in compliance with that. So we believe all other items such as reporting, use, expenses were fairly presented and in compliance. We only believe that the program income was not reported appropriately. Audit results, in order to us to get to that clean opinion, we received a trial balance, and there was 43 audit adjustments and reclassifying entries that got us from where the trial balance that was presented to us to what was actually presented in the clean opinion financial statements. In addition, our responsibility is to bring to the attention of the audit committee and governance any potential findings that we have. We noted during our test work a total of 21 total findings. Those findings included 8 material weaknesses, 10 significant deficiencies, and 3 other matter findings. A material weakness is something that we believe, if left uncorrected, would lead to a material misstatement in your financial statements. Significant deficiency is a little less than a material weakness. We believe that a combination of significant deficiencies could eventually lead to a material weakness, and other matters are more of a compliance item that's required to be reported under the New Mexico State Auditor's rule. It's important to note that from 2019 to the 2020 audit, there was 8 findings that were resolved. Chair Woodruff, that is the audit summary. Would you like me to proceed to going over the specific findings?
Maybe at a high level. You can lump them at a very high level.
Okay.
Al and Alfonso, do you guys have any questions so far? It's a lot of data.
Yeah, well, could Raul give us a sample, maybe a couple of specific findings where there were material weaknesses, just to kind of get a feel? Because we don't have the report. I don't have the report in front of me.
Yep. He's got them on the slide there. Raul, do you want to expand your slide there?
Yes.
Excellent.
Oh. Stephanie, what slide are you seeing?
I think just the first slide. I think if you go to slide, 4, if he starts with the audit findings.
Okay, I apologize. I thought on mine I'm showing them.
That's all right. Can you see the findings there, Al?
No, you have to talk. I'm not viewing. I'm listening and talking.
Okay.
Okay. I can see the findings now.
Okay. I will go over the.
Yeah, we just kind of summarize. Yeah.
I'll go over a summary real high level, and then I can go over any questions you guys might have. So our first finding.
Perfect. Thank you.
Our first material weakness was related to your schedule of expenditures of federal awards, also known as your CFA. This document tracks your federal expenses and grants during the year. We noted when we first received this document that there was about close to $6.97 million worth of federal expenditures. We noticed obvious errors in that schedule provided to us. Upon a couple of reiterations, we received a final one we felt comfortable with, and the final CFA contained in your financial statements included $4.1 million of federal expenditures during the year.
Yeah, I can see why that's a material weakness. Okay.
Yeah. The next one is related to just internal control over financial close and reporting. This is more of a general one. We just believe that the city can continue to work on its internal control and close process to make sure that we're closing timely, producing accurate trial balance, and that we don't need to get to where we have 43 audit adjustments to get to a clean opinion. The less audit adjustments means that accounts have been reconciled and prepared properly. So this is a repeat from the prior year, and we just believe that there's room for improvement there.
Well, I have a question in regard to
Sure.
that. Now, these trial balances, is the city actually preparing some kind of interim financial statements, monthly, quarterly, that can be looked at?
That is a great question, and I'll probably turn that over to Mary. I don't believe that's the case.
Okay.
Madam
We wanna do
Chair,
that.
Madam Chair, Member Castillo, we are not producing monthly financial statements. Our goal has been to aim for the current period, to aim for a quarter close to start that process. Again, in the current fiscal year. So the challenges that we outlined previously with staffing shortages and other priorities, like getting the $17.5 million in CARES Act out the door with the limited staff that we did have, took priority in the last year and a half period. We have, for the current fiscal year, for ongoing operations, contracted with REDW, and Rochelle Alcuin is on the call with us currently, and she is assisting us with, again, first targeting this quarter close process, and then subsequently in the fiscal year, our goal is to hit the month-end close process. If Rochelle, do you have anything to add at this time?
No, Mary, it's just basically the quarter is just to basically help catch the city up, because yes, the audits are late. And again, there was the $17 million CARES Act money that came in. And when you look at the current year CFA that Raul is presenting the findings on, it was about $4 million. So usually the city's used to managing that as far as like the grants and contracts. And then on top of that, they had to basically administer the 17 million. So it kind of pushed everything back. So we're going to start on a quarterly basis to catch up the 2021 audit. And so the 22 doesn't fall behind, just because with the limited amount of staff and resources.
Okay. Thank you, Madam Chair. That gives a sample of what the material weaknesses were. What I would like to do is go back, well, not now, but after they're done with the audit presentation. I have a couple of questions, one or two questions concerning the other presentation. Is that okay? We can come back to that later.
Yes, that's
Okay.
fine now. Thank you.
The next finding we had, 2020-03, was related to billing recognition of federal revenue. We noted that as of December 31st, 2020, a period of 6 months after year end, there was approximately $1.9 million of federal grants that hadn't been asked for reimbursement. These grants are reimbursement-based grants, meaning that the expenditures are incurred up front and then subsequently requested for reimbursement from the federal government. This is something that should happen on a more timely fashion than 6 months after year end. In addition, we needed a grant of approximately $191,000 through our confirmation process that hadn't been utilized for fiscal year 20, even though it was available for use during fiscal year 20. One other finding we had, material weakness, was over journal entries. And this was really during the year the city was using, as Mary and her team noticed, there was two systems: the result system and there was a new Munis system. A lot of the data was transported and used at the same time. So some data from the old system was put into the new Munis system through journal entries. And we noted that there was a lack of review in some of those journal entries that led to some of the errors. and delays that we ran into. Good internal control just recognizes that any adjusting journal entry that's put into the system is properly reviewed prior to entry. Another item we ran into was related to capital assets and CIP. The city has made progress on this, and we felt good with the construction process schedule that we received. Unfortunately, it took us a while to get there. The first roll forward that we had for capital assets stated that there was no construction process for the city for the fiscal year 20, which seemed hard to believe. That number eventually got to around 19 million, and we were able to tie that to an exact schedule. The finding is related to really that should have been more timely and something easy and properly recorded upfront.
But has that been converted to the capital assets inventory, or is it still under work in progress?
At the year end, it was still in work in progress.
Okay.
The next finding we had, this was related to what was labeled as payroll liabilities in the trial balance. We know there was roughly about $8.5 million of payroll liabilities, which was a number significantly higher than in years past. Your payroll liabilities are accrued your accrued wages, any para retiree payables, any payables to the IRS at year end. We verified that there was no non-payment. There was just some delayed payments to para that increased that amount. So we were able to reconcile that with the city to get to a number that was fairly stated. But it took quite the reconciliation effort after we received the trial balance to get there. The next finding we had was, this is more a significant deficiency. I'll stay to the material weaknesses. Let's see here. This one was over accounts payable. We consider this a material weakness. We noted that while the city was able to produce an accounts payable listing at a city level, that listing was not able to be provided at a fund level. It's important that we're able to get a accounts payable listing by fund so that each fund knows what its actual payables are at year end in detail to include invoice and dollars amount owed. Here, I think that was all the material weaknesses we had.
Mr. Anaya, do you feel comfortable on all the material weaknesses that the city has submitted appropriate corrective action to address these issues so that we don't have these repeat findings in the next year?
Yes, and that's a great question. And I would say, yes, I do feel comfortable with that. We've had specific dialogue over each of these findings. And I believe that management is engaged and there's a process in place to move forward. Does that mean that they're all going to be resolved in the next audit? That's going to be a challenge just because we're already in that, we've passed that fiscal year, but I believe both in the short term and long term, the city's headed in a good direction.
Excellent. Thank you.
Thank you.
Other committee members, do you have any questions for Mr. Anaya?
No questions for me.
Great. Okay. Okay. Well, thank you, Mr. Anaya, for that presentation. We appreciate all of CLA's efforts. We know that it was a heavy lifting, especially during the pandemic. So we want to thank you for your commitment and your hard work. And we look forward to this year's results getting even better. So thank you much.
In that regard, Madam Chair, I'm wondering, what is the status of FY21 audit? When is I assume that the date of completion is December 31st or thereabout. What is it, Mary?
Madam Chair, Member Castillo, yes, that is correct. The audit is due in the middle
Okay.
of, for fiscal year 21, the audit is due in the middle of December.
About, are you thinking that that may be doable, having the audit completed by the 31st of December?
We are, it is our target to meet that date, given the challenges that we've had in our staffing levels, just starting to hire additional staff, getting those, the RFP awarded for additional CPA assistance in the year. I think we have a really solid game plan for the next few months. It will be challenging to meet that deadline, but that is our target. If we do not, if we identify between now, the beginning of October, anywhere between now and December 15th, that we will not meet that deadline, we will be in communication with the state auditor's office, together with CLA, as well as communication with this body, as well as the governing body of the city of Santa Fe.
Okay, as long as, let me sneak in one of my questions here from one of the other presentations. Someone stated earlier that one of the real challenges for the city has been vacant positions. And the question I have for anyone, who, probably you, Mary, are salaries competitive for the kind of technical personnel called for? Is that, I mean, is that might that be a factor for not having filled these positions earlier?
Madam Chair, Member Castillo, that's an excellent question, particularly given the current economic situation we're in, as the pandemic continues and the labor shortages that many industries are facing. The answer to your question is best answered by using an example for one of the for actually two positions that we can use. For the grants manager position, that position was budgeted in the fiscal year 21, so last fiscal year, and we have gone out to advertise for this position and left it open for multiple weeks, and we have not received any qualified competitive candidates that are willing to come to work for the city for the salary that is identified in that job posting. It is one of the positions that we have posted again. Similarly, we are expecting, we have had a recent vacancy in our accounting officer. This is the chief accountant for the city of Santa Fe. Our accounting officer did depart in the middle of this audit process for FY20. And so we have since posted this accounting officer position, again, very senior level position. We would like this person we hire into the organization to have a CPA and other qualifications and years of experience, but we are fully expecting to have difficulties recruiting for this senior level position at the salary that the city government can offer. That being said, we had recognized this as a challenge, not just in the finance department, but also in other departments throughout the city, particularly with technical positions like engineers or like information technology professionals. And the city council did appropriate $200,000 for the HR department to conduct a classification and compensation study in the current fiscal year. So the good news is we are aware of these challenges, and we were able to address that and we'll be addressing that in the current year to really take a look at where the market stands now after the height of the pandemic, considering the economic circumstances that we're facing and the labor shortages that we're facing, the tightness in the labor market. And so we hope that, again, with a more thorough review of these positions, and you all can understand how niche governmental accounting is and how niche particularly governmental grant accounting is. And so we really do want to hire in folks to the city that have that years of expertise and have been trained to handle these responsibilities, these significant responsibilities for the city of Santa Fe. But that really does take a deep dive into the requirements for these positions and being able to look at the market and understand our competitive position to other or governmental organizations that are also trying to recruit for these positions, like the state of New Mexico, like the county, like even the city of Albuquerque or Lanel. We actually lost one of our employees that a little more than a year ago she was the payroll manager at the time, and she left to Lanel. So that we do understand that we're living in a pretty competitive labor market, not only with other governmental organizations, but also with the private sector as well.
Thank you.
Sorry for that. I got kicked off. Now I'm back on. Al, do you have any other questions or?
Not in this particular section, but I do have one from earlier concerning our capacity, our bonded capacity. The statement was made that we had a $180 million capacity, and that given the 19 million that's outstanding, so we're down to 160 million or so. Does that include revenue bonds or just GO bonds? I didn't get that. I mean, I did not clear in my mind.
Madam Chair, this is Brad. That is 161 million in just general obligation bonds.
Okay. All right. That's what I thought, but it wasn't clear to me. All right. That's all the questions I have.
Excellent. Adolfo, do you have any questions?
Just one question. We've got $500,000 budgeted for help in the transition. Do we have a plan in the future to hopefully hire the right people and bring that back in-house?
Madam Chair, Member Montoya, that's an excellent question. What we really skimmed over in our presentation earlier was, in addition to the $500,000 for contract CPA assistance for the FY21 year-end close process and audit prep that we're doing, we have also been fortunate that our city revenues into the general fund, which funds the finance department, have actually been increasing after the height of the pandemic last year. So what that enabled us to do citywide, but also in the finance department, is fill some of the budgets, some of the positions that we had to leave vacant last year. So that is the good news, that it is a combined approach to be able to rely on our professional CPA assistants that we're contracting with, but in addition to that, really build that team in-house. And again, over the course of the last 3 years, we have been able to hire on professionals like Alexis and Brad and Clayton, Melanie, and we have 2 other members of our team that are joining us today, both Andy Hopkins, our acting budget officer, and Patrick Lucero, our finance project manager, that also come to us with decades of experience, both in local government. And Patrick in particular was a definite asset for our team over the last year and a half, with so many vacancies in the grants management and accounting positions that we had. Patrick has really been able to step in, and given his experience at the state, working on pretty significant grants for the state, been able to assist us in this role. He was hired in to assist us with our ERP implementation. So we really were very fortunate that he did also have the experience in the grant world to be able to assist us with that. But we fully recognize, Member Montoya, to get back to your question, that we have to build this capacity internally to be able to really have the most robust team here available to address these problems throughout the 40-hour work week year round.
Thank you very much.
Excellent. I know that the finance department has had enormous challenges with the 40%, vacancy, with the pandemic, with the late audit from the prior year, with the new system, with the new, implementation of controls. So I feel very confident that this team that they're building under Director McCoy, that you guys are the A+ team, and looking back where they started, even before 2017, with all the issues with the old system, with all the issues noted with the McCarb report, I feel very confident that they're building the right, taking the time to build this team right, and providing whatever support is needed. And, as we know, as audit professionals, that this process takes years. And like I said, it's only getting better. And, I'm very excited for the team and their commitment. And I know that they've worked very hard, especially during the pandemic, in very difficult working conditions remotely. As you know, audit is more of an art than a science. It's a very collaborative process. And, they muddled through it and weathered this storm. And the city is in a very positive net position going forward. So I want to thank them personally for all their hard work and their commitment over the past year. So kudos to you guys. Excellent.
Thank you.
Are there any other questions before we go through? I know it was a lot of data. Okay. Next is any public comment? Okay. Any matters from staff? Any matters from the committee?
Madam Chair, just as far as matters from the staff, at the next meeting, we do look forward to continuing our internal audit presentations with our internal audit partner, REDW, and also to present the first quarter financial report to the audit committee. We also look forward to sending more regular updates to this committee on with the governing body members. We've been providing them monthly gross receipts tax updates. So we wanted to ask this committee if they would be interested in receiving similar updates, those same updates that we send to the governing body as well, to have more frequent reports from our team.
That's the major source of our funding, isn't it? I think we would, I would think it'd be a good idea to have at least an executive presentation of some sort, not detailed, of course.
I agree with that.
Madam Chair, members would be happy to send those via email and then schedule a presentation at an upcoming audit committee meeting. To that tune, if there is any other information as you are reviewing the financial statements or the audit findings for the year of FY20, if you have any questions, the staff, the managers that are presenting to you or any of our staff members are available to answer questions, again, about the financial statements or about the findings and what our corrective action is. We will be moving forward again with the corrective action plan, the more meaty corrective action plan that is behind the management responses, the brief description of the management responses that were included in the audit book this year. So more than willing to provide any of that information to the audit committee if they deem that to be appropriate as well.
Excellent. Thank you, Director McCoy. Are there any matters from the committee?
None from me.
None from me.
Okay. Matters from the chair? I have no other further comments. Next item would be the next meeting. Shall we plan for a December meeting or December or January? What do you guys think?
Well, since this is going to be the external auditor is going to be completing its work as of December 31st. Why don't we wait until after the first of the year?
Okay. So I know REDW, they're in the middle of the next internal audit. They're doing HR. So yeah, I think January would be probably the best. Probably, let's shoot for January 5th.
Sounds fine to me.
Let's target January 5th, Wednesday, 2020. The next meeting,
2 p.m.
2 p.m.
Stephanie, that would probably be 2022.
Oh, sorry,
January
2022.
5th.
Can you believe it? Crazy how time flies, huh? All right. Well, looks like we're ready to adjourn. Is there a motion?
A motion to adjourn?
Second.
Second. All in favor, say aye.
Aye.
Aye. Opposed? No? All right, motion is approved. We adjourn.
Thank you, everybody.
Thank you.
Thank you. Thank you, everybody.
See ya.
Thank you.